All right, welcome back to QuickBooks Online. So, where we are left off was finishing up the customers or the sales process in this case, right? Now, this section in chapter 5, so I call this 5.2, is going to be looking at customers and what happens when they decide to issue some returns and some refunds, okay? So in this case, right, one thing that we have to know is terminology. We need to identify the difference between a credit memo versus a vendor credit, okay? In reality or in real life, right, you can use a credit memo to apply it for a customer or a vendor. But when we're talking about QuickBooks, it's very specific because you need to know exactly what kind of transactions you are actually plugging into the QuickBooks, right? So in this case, right, you have to know that credit memos are only strictly used for just customers, and a vendor credit, right, is strictly used for just vendors, okay? So that is very important. So identifying the difference between a vendor credit and a credit memo. Now, down below here, we have a bunch of reasons of why we would use credit memos, right? So this one says if a customer decides to return merchandise from your customers, right? So again, what this is talking about is if there is an invoice, right? Especially if they have not yet paid, okay? So if there is that, you want to use a credit memo to reduce the invoice, okay? Other ones are going to be for, again, if there's a credit on an account, so for any reason that you issue, like whether it's a discount, right, that's a credit on an account or an invoice. You can also use it for, adjusting your accounts receivable, right? We'll talk about bad debt a little further on, later on in the rest of the chapter, okay? And of course, if you have sale that has been invoiced but not yet received, that's going to be one of them, okay? All right, so let's go ahead and issue our very first credit memo here. So again, right, let's talk about credit memos. So if you remember from a couple days ago, we just did we enter in our sales. So we did enter in this invoice number 6 here, where we issued an invoice to Miss Liz Cadell. Miss Liz Cadell purchased some equipment and requested for some videographers, okay? So again, here's the thing. She did make a partial payment on this invoice, right? She paid for the purchase of the equipment from us, and she had scheduled to for us to provide some videographers for her, right? She requested 3 hours worth and scheduled it to be completed by January 28th, okay? And we billed her on the 21st. So in this case, the scheduled videographers hasn't been completed yet. So that's the first invoice, and she hasn't paid for that section yet. So what are we actually going to be issuing a credit memo for? So let's say we did provide the service and Miss Liz Cadell ended up only using 2.5 hours. Okay, so therefore she didn't need that extra half hour. So she requested to us, hey, we were scheduled for 3 hours. I only used 2.5. So this is where we already invoiced her. She has yet to pay. So this is where we can go ahead and validate that and say, okay, we'll give you a credit for half the hour, all right? And we will apply it to your invoice so then you know exactly how much you need to pay the next time around, okay? So in this case, right, we're going to go ahead and issue Miss Liz Cadell a credit memo, all right? So how do I do that? So once again, we're going to go to our best friend here. You can click on your best friend, right? The plus new window. And under customers, you have credit memos. Okay? Credit memos. Now notice this, a credit memo will look identical to an invoice. The only difference is it does the opposite of an invoice, okay? Invoices increase accounts receivable, right? A credit memo does the complete opposite, where yes, you're charging for certain types of services or products, right? But what happens is you're decreasing the value of your accounts receivable, okay? So here we're going to go ahead and do Miss Liz Cadell here. So Liz, right there she is, Liz Cadell. Okay, and let's see what date we're going to schedule this. We're going to schedule, or in this case, we're going to go ahead and create this credit memo on February 1st. Okay, so that means after the service has been completed. For purchase order number 90210, and we're going to put a letter C, okay? C for the credit memo, okay? For the videographers, for 0.5 of them, okay? And of course, services are non-taxable. Katie Ropa is her sales rep. And then we got Walnut Creek for the store location or for the store class, and it was for corporate, okay? So let's go ahead and fill that in. So again, first thing we have here is going to be for February 1st, okay? Sales rep is Katie Ropa. All right, purchase order number 990210. But for the credit memo, we're going to go ahead and put purchase order number, so PO, number 90210 with the letter C. So we can make an association between why or where this credit memo came from. This credit memo came directly from this exact purchase order. Okay. Location we said was going to be Walnut Creek location. Okay. Tags is going to be corporate. So there you go, corporate. All right. And this is what we're going to do. We're going to return services to return a service for her. So service date, right, could be the same day. At this point, doesn't matter because we're not scheduling the service to be completed, right? But if you want to put in the date here, you can for the refund. Now, again, what is the item or service that we are refunding? It is for the videographers. Okay. All right, here's your description for 0.05. You do not need to put a negative number here. Why? Because we already know this credit memo is going to decrease the accounts receivable. So in this case, we're just going to put it in exactly like this as a positive number, right? We're going to refund her 50 hours. Okay, so therefore a total of $62.50, and this is non-taxable because it's a service, and we have it classed as store. Now, of course, you could put a memo in here saying that this was approved by the owner, whatever you want to put here. All right, but everything looks good. Okay, and I can go ahead and save and close, or I make sure the tax is Santa Clara, even though we're not charging the tax for her because it's a service. You may want to make sure that it's identified to the tax that is to that store, which is in Santa Clara County for the Walnut Creek location. So 0 for $62.50 credit. And I'm going to go ahead, save, and close. Okay, so if I go to my sales, right, window, I should be able to see under all sales that my credit memo should be there, okay, for that February. So here, credit memo, right here, purchase order number for Liz Cadell for that $62.50, and it's negative here, right? Okay, so how do I apply this credit memo to my actual invoice? So in this case, what we have to do is we have to use the receive payments window to do so, okay? Because this credit is as if you are making a payment, right? You're going to apply this credit, which will reduce the amount that you owe. So in this case, I am going to First, I'm going to locate her original invoice. So right here, Liz Cadell invoice, right? And what I'm going to do here is I'm going to go ahead. So as you can see, right, she currently owes $331.49 because originally we charged her $1,000 something, right? We already applied the first payment, which was to pay for the equipment. So she's still pending me to owing me $331. So this is what I'm going to do. I'm going to go ahead. So as you can see, it's overdue. I'm going to go ahead and click on receive payment. Okay. So once I go ahead and receive payments from Miss Liz Cadell, and let's say it is the 1st of February, notice this. You have the original invoice here, and you have the automatic credits already applied because this one is in relation to this exact invoice. So notice this. Subtracting that $62.50, that means this is going to be for a total of $68.99 is what she owes me. Now, this problem says that you are not going to receive a payment, okay, for this one. So do not receive a payment from Liz, okay? So that's what you want to do. You want to make sure that you have that we're just seeing how you apply the credit, right? In this case, you do that by going to the receive payments. And of course, if you choose to receive a payment, then you're going to plug in everything. But in this case, it told me not to receive the payment. So that's what happens here, right? You're going to end up looking here for the invoice. What is charged? What does she owe me? $331. And then the credit right here is going to pop up, and you're going to make sure it's checked off for that $62.50, which will reduce your total amount to $268.99. Okay, so she doesn't owe me $300 anymore. She owes me $62 less. So that is how you apply a credit memo. However, this one, you have to go ahead and plug in that under the receive payments. And if you do receive a payment, then you're going to have to plug in everything in. But right now, you can't apply a credit memo unless you actually receive the payment. So in this case, that's all I can do. I can just close that. But that's how you apply a credit memo. Okay? So now that I have that done, right, next thing is looking at a refund. Okay? Now, here is the difference between a credit memo versus a refund, right? In this case, you only use a credit memo if the person still owes you money, but they're returning merchandise, right? So basically, on an account. If there is an actual payment received, or in this case, if you sold something in store and they paid you right then and there, right? You have to issue a refund because you've already collected the money from this individual. So in order to give back that money, you're going to need to use an actual refund. So things that have been paid in full is where you're going to actually issue a refund, okay? Not a credit memo, okay? Credit memos are in case you have something that you billed them for and you need to adjust their invoice. You use a credit memo. So again, credit memo is primarily used to reduce your accounts receivable, okay? Where this one will just reduce your checking account or however form of payment that they paid you with. So in this case, if you remember, we put in a sales receipt number 1 here for Neo Garcia, who purchased 3 frames, picture frames. So she bought 1 metal and 2 wooden ones, okay? So because she decided maybe she didn't like the picture frame, so she's going to go ahead and return it. So in this case, because she already gave us cash payment, right? This is where your book is also inaccurate because it's saying that you're going to refund it to their credit card. No, in the original first scenario, they told you that she paid you with cash. So you cannot put money back to a credit card if they paid you with cash, right? You're going to have to issue them back their money from their checking account, okay? So in this case, So that's exactly what we're going to do. We're going to go ahead and put the cash back, give her the cash back, and it's going to come from the checking account. Okay? Now, again, we're going to go ahead and give her a refund. All right? So credit cards, if she did pay with a credit card, then yes, you're going to have to refund it back to the credit card. All right? So in this case, let's go ahead and issue Miss Neo Garcia her refund. So what we're going to do here, once again, you can go up into your sales section and be able to issue the refund, or you could actually go to that person's profile and do that. But let's go ahead and use my best friend here. So the plus new icon here under customers, and you have what's called a refund receipt. So once again, if a customer paid in full, you're going to use a refund receipt. Okay? So once again, this is issue to Neo Garcia. So there's Neo Garcia. Okay. Let's see what date this is for. So she returned on January 31st. For her refund receipt, it's going to be 1001C. Okay, for the Walnut Creek location, it's going to be cash from the checking account, and it's going to be frame 6x8 wooden frame, quantity 1. Make sure you put the tax on that for a total of $16.54. Mike Mizuki store location, and retail is her tag here. So in this case, once again, it's going to be January 31st. Sales rep is going to be Mike Mizuki. Okay. No purchase order number, but we do have the sales receipt number. It's going to be 1001, letter C. Okay. Now, are you obligated to use the letter C for a refund? No. But this is just to let me know that where did this refund come from, right? It came from the sales receipt number 1001, which we originally recorded for her, right? So this is just so that we can make an association between the sales receipt that we sold to her originally. Where is it coming from? So that's why we attach a letter C, so we know that this refund is coming from that particular sale. Now, you don't need to use letter C, right? If you want to, you can use letter R for the refund, right? Whichever one that makes it easier for you to remember, or to just make an association between the sales and the refund, right? It doesn't matter what it is, but I'm just going to go ahead and use letter C. And right here, once again, it was the Walnut Creek location. Tags is going to be retail. Okay? And then here is where I need to associate what kind of payment she's going to be receiving. She's going to be receiving cash back. And where is it going to come from? It's going to come directly from my checking account, right? Checking account. All right? And no, we're not going to issue her check, right? Because we already are giving her cash. Okay, so let's go ahead and identify the item. So in this case, she bought a wooden picture frame. So 6x8 wooden picture frame. Here you go. We're going to issue her the refund for one of those items, $15. And we need to make sure it is taxed. Okay, and then this is store location. Okay, so making sure we also identify which tax she belongs to. So because she's returning back from the Walnut Creek location, you want to make sure that it does say right here that she's going to get taxed at the Santa Clara location, okay, which is currently at 10.25%, so that should give you the total amount of $16.54, and that's exactly what we're going to give back to her, okay? So do you have any memos or any notes that you want to add to here, right? In this case, that's up to you if you want to put it here. So we got message to the customer. We have a message for the statement. So again, if you want to put your memo here, you can. So it says right here, I'm just going to go ahead and put memo for the statement saying that the owner approved by owner. Okay. All right, so once everything looks good, right, we can go ahead and click Save and Close. And there you go. And there you go. Check mark here tells me that the refund has been successful. All right, and I'm going to go ahead and click OK. All right, so now our job is to ensure that refund got to Miss Nao Garcia. How do we do that? I'm going to go ahead and go to my checking account and verify that my checking account has been withdrawn $16. All right, so here's checking. We're going to click View Register, and it should be on the 31st of January. So here, right here, the credit for $16.54 has appeared right out of my checking account. All right? Now, for any reason that you do not see this $16.54 appear on here, double check your deposits window, okay? Because sometimes if you're doing this manually and you're not using the payment system that Intuit offers, right? Sometimes it can be stuck in the deposits and you have to manually deposit that you're going to take $16.54 away from the account, okay? But in this case, because I took it directly out from my checking account, it took it out immediately. Okay, so there's that one. All right, so let's go ahead and take a look at another example here. Okay, so let's go to sales. All right, so let's go ahead and take a look at another example of another credit memo here. Okay, so here is one where it's an actual credit card transaction. So Miss Veronica Vasquez, right? We sold to her, and she paid with her credit card. Now in this case, right, hers is going to be special because we're going to revert the money back to her credit card. All right. Now this is where you do if you have paid for the subscription, right, for the payments, Intuit payments. It will automatically do this as soon as you click on the refund to the credit card, right? But if you don't, you do need to manually call your bank and tell them to go ahead and refund or issue Veronica that refund, okay? If you don't pay for that subscription. Okay, because in this case, but usually if you are paying that credit card for that credit card service or just paying Visa themselves, you have to call them to let them know that Miss Veronica is going to be receiving a refund. Okay, so that is if you don't pay for that subscription via using Intuit, because in this case, how is your credit card refund connected to your bank? Okay, we'll talk about that in chapter 5 and 6, or chapter 6. But right now, we don't have any of my bank accounts connected or any of my credit card accounts connected, right? So therefore, issuing this credit card cannot happen unless you manually call that credit card company, or if you paid for the subscription, it will do it for you. But for now, I need to issue Veronica, right, her refund, and I have to manually do it. Okay, so in this case, this is what we're going to do. We're going to go ahead and identify that we're going to give her the refund on the 18th of January. Okay, so this is what we did. We did the sales receipt for Ms. Veronica Vasquez, right? She purchased a Supra camera from us. So therefore, let's see what the refund is for. Okay, so here we're going to refund on the 23rd of January. Okay, we're going to issue the refund for 1002C, right, for Walnut Creek location, and we're going to put the money back to her credit card, and it's going to come out from, it says right here, to checking. Now, you can do the deposits to be taken out, or you could just do it directly to checking. So in this case, it's going to come directly out of your checking account. You got, you're going to return the lens, right? And of course, it's taxable. So you're going to be issuing a total of $203.95. Mike Mizuki is her sales rep, and it's going to be for the store and it's retail. Okay? So let's go ahead and issue another sales receipt. So right here, a refund receipt, excuse me. So refund receipt for Veronica Vasquez. Okay? Veronica Vasquez. Okay, and it's going to be for the 23rd of January. Okay, sales rep, once again, is that Mike Mizuki. Okay, credit number, see right here says 1002C. That's correct, right? For the Walnut Creek location, tags is going to be retail. Okay, and then this is where we're going to issue that payment to my credit card. Okay, to her credit card. All right, and where is it going to come out from? So in this case, if you chose to actually manually deposit this, then you can go ahead and make sure you call your vendor or call your credit card company and let them know that you're issuing a refund. Okay, but if you pay the subscription for it, you could go ahead and just use your checking account and it should take it off automatically. But let's go ahead and do that where I am going to be needing to do this manually. So I'm going to go ahead and put this under payments to deposit. So therefore, you're going to verify that you have that. You're going to have to actually call your credit card company to verify that payment has been issued. So you can go ahead and do this, right? So I'll show you how that will work. Okay. And you're going to go ahead and issue the lens. Okay, so lens. All right, and you want to make sure it is taxable. Okay, and make sure that you have it for the Santa Clara tax because she purchased this from the Walnut Creek store. So it should be for the total of $203.95, right? And you're going to go ahead and put the statement here that it was approved by the owner. Approved by owner. Okay. Once everything looks good, I'm going to go ahead and save and close. No, what am I missing? Let's see. Oh, I forgot to put the class in here for the store. Okay, and now save and close. Okay, once again, save and close. All right, there you go. The refund has been issued. I click OK. Now, if I go ahead and check out my checking account, okay, you're going to notice this. So checking. So let's go ahead and find that $203 transaction here. So again, I don't see one because it is pending to be authorized, right? So therefore, what am I going to do? I'm going to go to my deposits window, okay? So some systems will require this, some systems won't. Here, this is where you need to call your credit card company, let them know that you are going to approve of this transaction to issue a refund for $203. You need to verify this, right? But if you already paid for the subscription, it should be automatic. And we're going to go ahead and make sure that we make this deposit clear, right, on the 23rd of January, okay? So if everything looks good and you're going to deposit this to your checking account and you're going to make sure that that deposit goes through for that for that $203, right? I'm going to go ahead and verify that. So this is where, in this kind of system, right, you need to verify that you're going to go ahead and issue this by calling your credit card company, right? Some of these things are not automatic, especially when you don't link your bank account to your QuickBooks Online account, right? You're going to have to manually issue that refund regardless if you do not connect your banks to your actual Intuit account. Okay, so that's what I'm doing here is I'm manually issuing this refund back to her. And everything looks good, so I'm going to go ahead and verify that I'm going to deposit a negative $203. And I'm going to click Save and Close. There you go. So then now that issue for $203 should be now apparent right here for the 23rd of January, right there. I've sent the money back to her account for $203. Okay, so that is something that we need to know for refunds. Okay, all right. So now that we talked about refunds, let's talk about what happens when you need to, when a customer gives you a bounced check. So we already talked about crediting your credit cards here. So what happens when, so here's the negative deposit right there, right? Okay. So let's see what happens when you need to issue something that happens when you have a bounced check. Okay, because oftentimes, sometimes, yes, you'll have that occurrence where a customer will give you a faulty check. So what do you need to do when you actually receive a faulty check? Okay, so that's the next one, is receiving a bounced check. So, for instance, when you do need to issue, or in this case right now, you need to record that the bounce check had occurred. Now, oftentimes when you do deposit a faulty check, guess what? You get penalized for that because you're basically putting in money that doesn't exist, or a check that doesn't exist, right? Because what they're doing here is they are trying to your customers trying to pay you, but they just didn't have enough money in their checking account. So the bank is going to charge you a fee for the convenience of processing something that the other bank did not have. Okay? So in this case, when you're trying to process a bounced check, there's a few steps that you have to do to record this bounced check. Okay? So in this case, we're going to be looking at Madeira Builders, or Jamie Madeira. She paid us on January 31st for 2 of the invoices, right? So 2 of those invoices, right, for the David couple, right? Or I'm sorry, this is for the DeVoe residents and for the other residents, right? So Madeira paid a total of $875. But what happened was her check bounced. So what are the steps that I need to take to record this bounced check? So first thing that we gotta do is we gotta ensure that we have a billable expense account. Okay, because in this case, what's going to happen is the bank is going to charge me for putting in a faulty check, right? So if the bank is going to charge me for these service charges, right, I need to also charge Miss Madeira for the inconvenience of my checking account, because why would it be my fault that she sent me money and when I put in the check, it bounced? Why do I get charged and I have to pay for that? So that's exactly what you're going to do. You're going to record that you got a fee from the bank, and you're going to tack it on to Miss Madeira's bill and have her pay you the amount that she owes plus a convenience charge or plus the bank fee charge, right? To cover for the charge. So in this case, we need to make sure that we have a billable expense account, okay? Which is going to be a service / fee. So I'm going to go to my chart of accounts, which I'm in my checking account. So let me go to my chart of accounts, okay? And I'm going to create an expense account if I don't have it. So let's see if I have billable expenses. So let's see, I have billable expenses income. Yes, I do, right? Income account for sales of product income, which it's more of a fee, okay? But in this case, let's see, we have that account. Maybe I can build a sub-account under it for the service and fees. So let's go ahead and build a brand new account just so then I can expand that for that. So again, this is going to be an income account, right? We want it to be an income account, billable expenses for service and fees. So again, it's going to be under billable expenses, income, and we're going, not products of services, we're going to have this as service and fees income, all right? And I'm going to go ahead and put service fees, okay? Description, once again, will be your service fees, okay? All right, everything looks good, so I can go ahead and click Save and Close, okay? So there you go. Now I have a billable expense for the service fee. So if I go ahead and put service, there it is. I have an account for service fees, okay? And it's an income account for billable fees income, okay? For service fee income, all right? So now that I have that account in there, what I need to do is now I need to be able to create two items, two service items, okay? One to represent that there's a bounced check going on, and one to record the NSF fee, which is going to be me charging the customer extra for the convenience of the non-sufficient funds fee, okay? So that's what I'm going to do. I'm going to create two service accounts, right? For one for bounce check and one for the NSF fee. So once again, I'm going to go to my list and go to products and services. Okay, products and services. All right. And I'm going to go ahead and create a new service. So there you go. Click new. Click on service. Okay, and what is this service name? I'm going to call this bounced check. Okay. And I'm going to, let's see. Class, well, this could apply to any of them, right? So you can either leave that blank or you can choose admin, right? Because admin could be a category because this is out of it doesn't belong to the store, right? This is an administration charges, and it's going to be for overhead, right? So again, category is going to be admin, which I don't have categories here. So class is going to be overhead. There you go, overhead. Description, right? Bounced checks. All right. Sales price, right? It's going to be 0 because we don't know how much the check is going to be bounced for, and it's going to be from your checking account. That's the income account. It's going to come from your checking account, and it could be non-taxable. We don't know. I mean, in this case, since it's a bounced check, it's going to be non-taxable, right? You can't charge tax on a check that someone has issued. So I'm going to go ahead and make sure that this is non-taxable. Okay. All right, I'm going to scroll down and click on non-taxable. All right, and click done. And then once everything looks good, we can go ahead and click save. Okay, so I created my bounced check service, and I'm going to create one more for that NSF charge. Okay, so service, this one's going to go to NSF fee. Okay, this is also going to be an overhead class. And then, let's see, description, NSF fees from bank. Okay, and then let's see, what is the income? What is the income here? Income is going to be 0, and it's going to be services and fees, which is going to be non-taxable. Okay, 0 to service fees. So service fees right here. All right. And it's going to be non-taxable. Right? You can't charge tax on services. Click done. Everything looks good, so I can go ahead and click save. Okay? So now that I have those items in here, I can now proceed to the very next step, right? Because the very next step is your bank is going to charge you for the inconvenience of that NSF fee, right? Or in this case, they're going to charge you for them processing a faulty check. So what are you going to do? You're going to go ahead and identify that National Bank has charged your checking account as of February 15. Okay? So once again, this is an expense account because what happened here? Did the bank charge you via credit card? No. They charged you via on your checking a card through an ACH or they could do it through an EFT. In this case, it'd be ACH because that's the auto clearinghouse. So in that case, you're going to be needing to use an expense account because you're not going to write a check to your bank, right? The bank is going to automatically charge you and take it off of your account automatically for you. So in this case, I'm going to put in National Bank. Okay. So again, NAT, National Bank. Here they are. Okay. And it's going to come out of your checking account. Yes. What dates? It's going to be on February 15. Okay. And what's the form of payment method, right? It's either going to be an auto clearinghouse or it could be an EFT. In this case, most likely it's going to be an auto clearinghouse. Okay. Let's see here. Date is the 15th. No reference number. Okay. Overhead for the category of bank fees. So you should have an account already existing for the charges for the bank fees. And you're going to put that it was a charged account. Okay. Tag is admin, overhead, and it was for $21. Okay. So no reference number, location will be overhead because your bank account affects both stores. This is admin. Okay. And let's see what this category is. This category is bank services. Okay, come on, categories. Bank. So you got National Bank, bank fees, and service charges. There you go. Description here is NSF NSF service charge. Okay, for the amount of $21. Okay, and again, it's not if you want to bill it, you can. If you want to send this bill along to Miss Madeira Builders, you can. We'll talk about what this billable feature is in chapter 9, but in this case, I'm not going to bill it to anybody because I'm already going to issue her a new bill anyways. So in this case, no need to do that. It's non-taxable. Class is going to be this is going to be overhead or it's going to be admin, whichever one makes sense to you. In this case, it's overhead. Okay, so you want to ensure that the total amount that you're going to be required to pay, which already took out of your checking account, which is going to be for $21. Okay, and I'm going to go ahead and save and close. Okay, so then now I need to issue Miss Madeira Builders a brand new invoice. Okay, I'm going to invoice her, which is going to include the bounced check and it's going to include the inconvenience of the service charges, right? So let's see here. Okay, we're going to go ahead and create a new invoice for Miss Madeira Builders. Okay, and it's going to be for February 15. Okay, due on the date of the receipt, Mike Mizuki, invoice number 1069. So let me go ahead and do that. So I'm going to bill her a brand new invoice here. So let's go ahead and do that invoice. Okay, for Jamie Madeira or Madeira Builders. So MAD. So here we go, Madeira Builders. Okay. For the date of net 30, nope. It's going to be due on the date of receipt. Okay. We're going to bill her on February 15. Okay. Sales rep, once again. Oh, that's shipping. Sales rep is Mike Mizuki. Okay. No purchase order number, but definitely an invoice number. Okay. 1069 is for the San Jose location for the service of the bounce check and the NSFE. So again, invoice number 1069. What is this for? The San Jose location, because that's where she purchased our products and services. All right. I believe her is going to be retail. Okay. Okay. And let's see, what are we going to be charging her for? We're going to charge her for the bounced check. Okay, so bounce check. Okay. And we're going to go ahead and say for one for a total of $875 was her total. And again, it's non-taxable and it's to overhead. Okay. And then the second one we're going to charge her is the NSF fee. And NSF. There you go, NSF fee. Okay. One of those, and it was for a total of $21. Okay. I mean, in this case, for that type of convenience, I would charge her a higher price for that. I expect her to get a profit for that. In this case, I would charge at least $25 so I can get $4 profit out of it for the inconvenience of, sending me $875 and that money didn't go through. So for that, I would be charging extra on top of that. But in this case, your book tells you that you're just going to just charge her for the extra $21. So her total amount is $896. And that's what you're going to charge her. So that means she's going to have to pay you an additional amount. Okay? All right. So, right, it's non-taxable, but we want to make sure that it is taxed at the San Jose location for $896. Okay? And I'm going to save and close. So we build, I clicked save and new. Oh, there you go, save and close. Okay, so again, we issued Madeira a brand new invoice that charged her for the 2 invoices that she didn't pay yet, plus the inconvenience service charge, right? Okay. And that's how you deal with bounced checks, right? So let's go ahead and talk about writing off bad debt. Okay? So, how do we write off bad debt? What is bad debt? Okay? Bad debt is when a customer fails to make a payment for what they owe. So in this case, if you remember, we issued invoice number 3, which was for the Satterley wedding planners to Greg and Andrew David, right? We issued that on the January 20th, okay? And Katie was responsible for this one for the purchase order number 1042 for the San Jose location, and they purchased from us to schedule a deluxe photo shoot to happen on February 20th, okay? And again, we issued this package to them. Now, let's say, for instance, they decide it's now fast forward past some time over and they haven't paid me at all, okay? Now, remember, Satterley's the person that we billed, right? So in this case, we need to make sure that because it's been quite some time and we kept issuing Satterley their invoices and we haven't seen a payment yet, that's considered potential bad debt. Now, when a customer refuses to pay, or they just don't pay, or we keep charging them late fees after late fees after late fees, right, and they're not responding, you need to make sure that you exhaust every ability to collect that debt, okay? Because again, if you're charging for these, products and services and you're not getting paid for them, right, it hurts your business because you need that income to continue your operations. So when you have those customers who just do not pay or fail to make a payment, right, you do need to acknowledge that, and you either have to write it off, your bad debt. Now, for this, right, the government does allow you to write off bad debt because in this case, right, that was your risk of doing business. Your risk is that you are allowing your customers to take your products and services and promise to pay you back. But again, we have to also consider that sometimes your customers, they can have different situations where they're they don't have financial stability, right? They might not be able to afford to pay for the products and services that you provide, or so on and so forth, right? They might lose their job. So in this case, right, it's very important that you know that by writing off bad debt, right, this, allows you to continue your business, right? Even though you know that this person, owes you money, right? That you don't have to worry about collecting the payment because at the end of the day, if you exhausted every ability to try to collect the money and they're just not paying you, then you can go ahead and clear it off of your accounts receivable. So it's not just there on your accounts receivable account, okay? So we call this writing off bad debt. Now, your book is actually going to teach you to use the direct write-off method where you're directly taking it off of your accounts receivable. Now, for this, that is only for tax purposes only, okay? And that is for tax accountants to be able to do that. And as your position, right, you do need to have a lot of higher education to actually be a tax accountant professional. If you're not a tax accountant, right, and you're just a regular accountant, you actually do not have the ability to do this. However, so for this class, right, I'm just going to teach you what they teach you in the book, but you do need to know that you are not able to do this if you are not the tax accountant. So how should you go around this situation? Well, like I said, I'm going to teach you whatever the book teaches you, but just know that there is another way that regular accountants need to do that's approved by GAAP, right, the generally accepted accounting principles, right? They're the ones who govern accounting. So to be completely validated with the GAAP, right, you would be using what's called the allowance method of writing off bad debt. So you're going to be using a contra account, which will reduce the accounts receivable, but you're not going to actually take the money off of the accounts receivable. You're just creating an account, a temporary placeholder account, until you confirm that it's been a few times, like some time has passed, and that you are able to go ahead and clear that off of your books so that you can prepare for the next accounting period or accounting year. Then that's the steps that you need to take. But for the sake of this class and all the materials that we have to go through, I'm just going to teach you what's ever in the book. And we do teach that allowance method in the accounting program. So again, we're just going to go ahead and do whatever is in the book, okay? Just know that this is for tax accountants. So how do you write off bad debt? You need to first have the proper accounts in your chart of accounts in order to go ahead and process this bad debt, right? You need to have a bad debt account, which is a regular expense account. And I'm going to go ahead and do that by confirming that my chart of accounts has a bad debt expense account. So let's go to your chart of accounts, okay? And let's go ahead and see if you have a bad debt account. So in this case, you do have a bad debt account. It is an expense account, so good. You're good to go and can go ahead and start. If you don't have this in your chart of accounts, go ahead and add that in there by doing the steps there, where you're going to add in an expense under the bad debt expense account, okay? So now that I ensure that I have that, I can go ahead and proceed to step 2. Step 2 is you need to build those service items once again, because if you're going to be plugging these into your customers, you need to use items. You cannot ever have a category and charge it, or in this case, yes, you need to have products and services to charge to your customers, okay? So in this case, you need to have 2 service items. Now, in this case, I don't think it's necessary to create 2 service items, one that's taxable and one that's non-taxable. You could get by with just having one and just checking off whether it's taxable or not, right? It's not necessary to create 2 different accounts, one for non-taxable and one for taxable items. You can just create one. And that's what I'm going to do today, because the book says for you to create 2, but like I said, you can deal with just having one. Okay? So I'm going to go to my products and services, and I'm going to go ahead and create that bad debt service item. Okay, so here, I could have just clicked products and services right here under my sales here, and I'm going to go ahead and click on new, and we're going to create a new service item, and we're going to call this bad debt. Okay. Okay, bad debt. Okay. What is the class under? Once again, this is overhead because bad debt can apply to either store. Okay. Description, bad debt, or you can call this uncollectible bad debt, potential bad debt, off of accounts receivable, whatever you want. Okay. Sales price is going to be 0 because you won't know how much debt a customer can, accumulate. And what account is this going to be? This is going to be for the bad debt account. Okay? Bad debt expense account. All right, and again, you can leave this option whether it's taxable or non-taxable because again, you can always modify that on the actual sales form. So there you go. I created my bad debt item, service item. Okay. So now we need to create a credit memo because remember, a credit memo, its sole purpose is to help reduce the accounts receivable. Because in the very previous one, right, I said that we issued an invoice to Satterley Wedding Planners, and they have yet to pay me. So in this case, fast forward, let's say it's April 30th, and Satterley has not paid me yet. Now, you definitely want to make sure you give them ample amount of time, research why they're not making a payment in time. Since you said that they scheduled for the February date, they were expected to pay by March, I'm assuming. So again, it was 30 days. So again, you need to investigate before you just write them off as bad debt. All right? Because the standard rules and procedures on ensuring that this bad debt is really not going to be collectible. You need to exhaust every way to try to retrieve that money. Whether it's sending mass emails, sending a bunch of letters, charging them late fee after late fee, contacting them via phone number. Okay? Whatever you do, you need to be able to try to get in contact with this person and collect the money. Right? And if it's been a while, so usually, I would say 6 months would be a good time frame to do that. But for many corporations, they don't have that kind of time to do that. So if if it's within a month or two, and you for sure that they're not responding, then you can go ahead and safely remove them from your accounts receivable and put them into a placeholder account, or then write them off as bad debt. So in this case, right, we're going to create a credit memo to reduce the accounts receivable that we already charged them for the Satterley Wedding Planners. Okay, so let's go ahead and verify that, right? Let's verify that Satterley owes me money. So if I go to my customers, right, and I go to Satterley Wedding Planners, we can see right here that they owe me Satterley Wedding Planners. Oh, it went back. It brought me back at the top. Satterley Wedding Planners. They owe me $785. Okay. So let's go ahead and create that credit memo once again. So I'm going to go to the plus new icon here, and I'm going to create that credit memo since I have everything that I need. Right. And we're going to go ahead and issue this to Satterley once again. Satterley Wedding Planners. And we're going to assume that this is what? April 30th now. Right? It's been 2 whole months and they're not responding. Okay. Sales rep is going to be... All right, I don't have a sales rep here, but we do have the purchase order number 1142, letter C. Okay, for the deluxe shoot, make sure you, so what we're going to do here is instead of putting the deluxe shoot, right, we're going to take that and we're going to replace it and put in bad debt expense. Okay, we're going to replace that with the bad debt item. Okay, so if you remember from my previous invoice, right, I charged the services, right? It was the deluxe shoot had it was a package, right? An indoor photo shoot, a outdoor photo session, and it had a retouching services, and it had a photo package, right? Now remember, we only charge for the products that they purchased, right? So in this case, this deluxe package included the product of the photo package, right? But everything else was a service. So you do need to identify those items. So what I'm going to do here is I'm going to pull up that purchase order, right? And then it's going to copy all that information. Now, if you choose, okay, to do this manually, you're going to go ahead and do the new icon and then plug all the other information in. But you can go ahead and locate that exact invoice and be able to just, change all the information in there. But in this case, we're going to go, or, create the credit memo from there. But in this case, I'm going to do a deluxe shoot, right? And I'm going to change all of those items to bad debt items and make sure that I have that one photo package to be considered charged as taxable. So once again, right, for the date, we said was April 30th, no sales representative. Purchase order number, right, was that 1142C, but I'm going to go ahead and put that here. So I'm going to put purchase order number 1142. And then my credit number here is going to be purchase order number 1142, letter C. Okay, and it was for the San Jose location. Okay, and what was this for? This is for wedding photo shoot for the tag. So wedding, there you go, weddings. Okay, and what you're going to do here is you're going to go ahead and put in that deluxe package so we can see what we charge on our deluxe shoot. Okay, and what we're going to do is we're going to change all these items to include. So that means that one item that I have on here was for the 155, and that one was taxed, right? So you're going to go ahead and go through every single item here, and you're going to change them to bad debt. Okay, so you change the indoor photo session to bad debt. Okay, and then you're going to change this photo session to bad debt. Okay, or if you can just already just see that one item there, you can just go ahead and just erase everything and then just put in, so you know that that taxable item is for that $100 dollars. Okay, so here you go, bad debt. Since I already know that the whole entire package is going to be for that amount here, so I'm just going to go ahead and put bad debt item here, non-taxable for the services. So for the indoor photo session, outdoor photo session, and retouching of photos is going to be for $615. Okay, so that's what I did, bad debt. Okay, for one of them for $615. And because I chose, I can untax that. So there you go. There's the first one there. And then I can go ahead and create my second one. So you definitely want to make a separation between your taxable items and non-taxable items. Okay. For 155. Okay. And since this is taxable, it will automatically charge the tax. And this is for the San Jose location. Okay. So there you go. You're going to get that same exact account balance for that $785.12. And that's the credit memo here. So I just saved some time. But I did want you to see what is included in that deluxe shoot. Okay. And once again, we got to issue them to, you could do store or overhead for weddings. Okay, so so they're automatically overhead. Okay. And once everything looks good, I'm going to go ahead and save and close. So there you go. I have that. So now for this one, because in this case, I need to apply it to the invoice, right? I need to apply it to that invoice for Satterley Wedding Planner. So here you go, Satterley. Here's the invoice. And I'm going to go ahead and click Receive Payments, right? For that $785. Now, once I do this, right, $785, I'm going to go ahead and, since I received the payment, hold on. I don't see where that credit memo is. Maybe I made a mistake. Let me see. Credit memo for Satterley. Oh, I forgot to. Okay. I see you here. So in this case, I have to go back to the Satterley Wedding Planners, because what I forgot to do is I forgot to actually link it to the Satterley Wedding Planners to the Greg and Andrew David, right? That's the one I need to make sure I associate it with. And then I'm going to go ahead and click Save and Close. So now that I saved and closed that one, and it's now to the wedding planners for the Greg and David. So if I now go to that invoice, it should be there. Okay, so receive payments. Okay, so there you go. Now that I have that right there, right? So let's say today is, we set that, we're going to cancel their invoice out with April 30th. Now, in this case, let's just say they paid us via ACH, right? We're just going to clear it out. Let's see, what else do we need to do? Okay. We're going to clear the payment for that invoice right here, credit memo. Okay. For the Satterley Wedding Planners, and we're going to apply it to there for the total balance of 0. So once again, right, you have everything here, and look, now my account balance is 0. Why? Because my bill right here was for that $785, and then boom, you applied that credit memo, which evened it out to make it to 0. Okay, and that means the payment received is 0. Okay, and I'm going to go ahead and click Save and Close. So there you go. Now, if I actually go to my Satterley Wedding Planners, if I go to my customer's account, let's see what happened. Satterley Wedding Planners, now they owe me $0 is because I use that credit memo to get rid of that invoice. And now, next time Satterley wants to do another project here, you tell them no, right? This is just so then you can keep in your customer records that they are not going to pay you ever. So in this case, you don't want to provide any more service to that person. Okay? So what I'm going to do here is I'm going to stop here for a break. Okay? And then we'll come back and talk about delayed charges.